It's time to do another 55 minutes around the world of business. This time is Business Incorporated, and here's what we have prepared for you. We'll be looking at how to curb illegal fishing in Nigeria. It costs Nigeria about $70 million annually. Ethiopia is planning a hike of coffee production. President Ramaphosa of South Africa is preaching the Africa United message again. Welcome to the program. I'm Ini John Mekwa, and we start as usual from the global space, telling you what's going on with oil prices. A little changed as investors are waiting the outcome of the U.S.-China trade talks in London. Will talked about that earlier today, in the hope that a deal could boost global economic outlook and subsequently fuel demand. So looking at the numbers for this afternoon, it's a reverse of what we had in the morning. We see a 0.38% up for Brent to $66.73 a barrel. WTI is also up 0.37% to $64.80 a barrel. First of all, of course, is that talks on the outcome going on in London, I believe, as we speak. And then U.S. President Trump and China's leader, Xi Jinping, they spoke on the phone on Thursday. That moved the market last week before U.S. and Chinese official, and they say sentiment around there is coming positive, and so we see it feeding into the market. A trade deal between the U.S. and China could support the global economic outlook and in turn boost demand for commodities, including oil. Monday's talks could dampen the impact of prices if a slew of Chinese data releases do not come out as expected. Chinese growth exports slowed to a 3-month low in May as U.S. tariffs curbed shipments, while factory gates deflation deepened to its worst in 2 years, heaping pressure on the world's second-largest economy at home and abroad. And still in the oil space now, the Petroleum Products Retail Outlet Owners Association of Nigeria, Petrom, they're still asking the NNPCL on the timeline for the rehabilitation of refineries in the country. The national president, who was a guest on Business Morning earlier today, says holding back information such as that has created distrust between the people and the NNPCL.
I do not blame any Nigerian for thinking that way, because if I want people to know who I am, I'll have to act and walk the way I truly want to be known. And if my actions are not as clear and as transparent, then of course people are want to make their own suppositions and do projections and speculations about me. So NNPC has created that kind of environment where it's now difficult for the public to trust them with everything. And I think it will be in the best interest, not just of the management, but of Nigeria, that mindset should be changed by the current management. Engineer Ojulari is coming from the private sector, a very well-organized private sector, because it's coming from a Shell background. So I believe that him and his team, and Mr. Kida, is also coming from Total. So these are people that have gone through a very regulated and very efficient system, and I think that they should bring their experience to bear in how the Nigerian oil industry should be. And NNPC should right away spring up from his doldrum and raise his head up and say, okay, well, so many years ago we didn't do it right, but now we want to do it right. And I think that there is no time that is better than doing that. So again, let us give our best support and our valuable thoughts and prayers to the Engineer Ojulari-led team that they will not in any way fall into this same assumptive, perception of Nigerians, that they came, they saw, and they changed the narrative.
Back to the global space now. Gold prices rose on Monday, supported by a weaker U.S. dollar ahead of that talk between the U.S. and China That's in London, and it's aimed at resolving tensions, while platinum extended gains for a sixth straight session to scale a four-year peak. Spot gold rose 0.3% to $3,318.76 per ounce after dropping earlier in the session to $3,293.29, and that's its lowest since June 2nd. U.S. gold futures fell 0.2% to $3,339.70. The dollar fell 0.3% against a basket of pairs, making bullion cheaper for holders of other currencies. Investors recognize that drivers of gold, including trade and geopolitical tensions, debt concerns, and weak economic growth, remain in place and should continue to support the metal in the months ahead. U.S. and Chinese officials will sit down in London today for talks aimed at diffusing the trade dispute between the two superpowers. Stronger than expected U.S. non-farm payrolls that came out on Friday and has led investors to scale back expectations for Federal Reserve rate cuts this year from 2 in 1 October. Market attention will now turn to U.S. CPI that's due on Wednesday for further clues on the Fed's monetary policy path. Gold, considered a safe haven asset during political and economic uncertainty, tends to thrive in a low-rate environment. Meanwhile, China's central bank added gold to its reserve in May for the 7th straight month, and that, of course, increases the demand for it. Spot platinum rose 0.1% to $1,201.75, and that's the highest since May 2021. Away from the global space, back here in Nigeria, the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, has highlighted the strategic role of comprehensive land reforms in driving Nigeria's economic transformation, particularly in job creation, urban renewal, and enhanced revenue generation at the subnational level. He was speaking during a high-level strategic dialogue with a delegation from the United Nations Home Settlements Program, that's UN Habitat. Mr. Edu emphasizes that modernizing Nigeria's urban development framework through land tilting, spatial planning, and documentation is essential to attracting investment and fostering public-private partnership. UN Habitat commends the Nigerian government's renewed commitment to the Nigeria Land Tilting and Documentation Program, a flagship initiative designed to enhance land tenure security, expand the national tax base, and unlock private capital across critical sectors, including real estate, agriculture, and logistics. We're still in Nigeria, where the power distribution companies, that's the DISCOs, they failed to recover over 202.6 billion naira in electricity bills within the first quarter of 2025. This is according to new data released by the Nigerian Electricity Regulatory Commission, the NERC. This revenue shortfall, representing more than a quarter of total billing points, is due to deep-rooted structural inefficiencies undermining the country's electricity sector. The NERC's latest fact sheet shows that 12 DISCOs billed a total of 761.9 billion naira from January to March 2025, but managed to collect only a paltry sum of that. The 12 power distribution companies, also known as DISCOs, billed customers a total of 761.91 between January and March. However, only 559.3 billion was collected during the period. That translates to a revenue collection of just about 73% and a shortfall of 202.61 billion naira. In Nigeria, an estimated $70 million is lost to illegal fishing every year. It's about 2 years since the Marine and Blue Economy Ministry was created in the country, and stakeholders are asking how effective this has been, especially in curbing illegal fishing.
So I think that it's really looking at the structure. Is it still regulated as it used to be? Maybe because it began to sort of die down, wasn't thriving, that part of the sector wasn't thriving as much. So I think that it's a bit unregulated. So someone could just go like on a fishing boat, and then they're just, they're just, taking fish. And it's really good species of fish that they could export and earn a lot of foreign exchange for. So now that we have and still back to not having a dedicated ministry who's saying that I'm responsible for this, I'm going to be looking into all these issues, I'm going to ensure that the right frameworks are there, both legal, how do we prosecute? What does the law say about, which areas are out of bounds, who can trade there, things like that. And that's what having a minister who this is all he does for the sector, because then he can look at these things, develop them, and also implement them. So like I said, I know he spent a lot of time last year trying to really understand the sector, that part of the sector, and we're looking forward to implementation. And private sector needs to also match that energy, because he can do all these things, but if private sector doesn't show up to say, okay, we're ready to take advantage of the opportunities, we're still going to see foreign players who come in and take advantage of the opportunities. So yes, he can put the policy framework in place, he can have the financing structures in place, fiscals that favor, but then private sector have to match the energy as well.
Well, that was the conversation I had earlier during Business Morning. Now let's follow that trend. We're talking about the marine and blue economy then, but let's look at the wider market and the economy as we count down to June 12th, when President Tinubu will officially turn 2 years in office. And we're doing that in the studio here with Mr. Oluwaseyi Odufuwa, is the Chief Operating Officer of Skyview Capital. Thank you so much for joining us, Mr. Odufuwa, and welcome to the program.
Yeah, thank you for having me once again. It's the Managing Director, CEO.
I bet.
Chief Operating Officer.
Yeah, sorry, you were some time ago, but you're out of there now. Yeah, good to have you. So, we're counting to 2 years now of President Tinubu.
Yes.
You deal with the funds, the financing, and all of that. The reforms have received a lot of applause.
True.
Has it received a lot of applause from your corner?
Yes, we mentioned so many here the last time I came, and in different forums too. So looking from our trajectory where we're coming from a deficit end to an equilibrium point. And in economics, the equilibrium point is the zero level. It means that if you look at the Fitch ratings, it says that from negative to stable. So it means that the economy, presently as we speak, is in a stable state. And when you look at the trajectory, we're coming from a zero, like I said, a negative point. Let's look at some of the policies. We have all read about subsidy removal, floating of the naira. We have looked at revenue to debt servicing, 98% to 68%. Presently at about 45%, because total debt servicing for 2025 is 16 trillion. And if you calculate it to revenue, it's about 45%. And for 2025, I know that by the time the administration completes this year, we will have about 40% revenue to debt servicing. Look at oil production. Oil production as we speak presently, an average of 1.75 million barrels per day. We're coming from about 1.3 to about 1.45 and presently 1.7. So it means more revenue. Look at capital import, capital inflow. It has gathered about 43% more. Look at the markets too. I mean the equities market, the bonds market. In 2024, 38%.
So you're attributing all of this to the reforms?
Yes,
but
I'm
the man
attributing.
on the streets will not agree with you.
I agree.
Odufuwa,
Yes.
People are hungrier
Yes.
than before. Things are more expensive than before.
Okay.
So I'm sure you're in a tush place and you can say all of this. But if you get out on the street there,
Yes.
I don't think you will come out safe.
I think that for the man on the street, we must know where we are coming from. For the man on the street,
For the man on the street, the
yes.
bag of rice was not as expensive as...
Yes,
For the man on the street,
yes.
the dollar did not
Yes.
go for as much as it's going now.
Yes, I agree with you. And so if we want to take it back again for the man on the street, we were coming from somewhere. At that point, I've mentioned revenue to debt servicing alone, 98%. The economy was almost gone. probably, navigating towards a Somalian economy. And if you look at it presently today, what are the kind of cushions Nigeria have as a country? It is quite low. We are highly dependent, almost 90% on oil revenues. That is our total revenue in terms of what we get
so
from
have we diversified now?
That is part of the things we should look at in the next 2 years to
Okay.
go. So
all right, but we haven't
talking
looked at it in the first 2 years.
Yes, so having looked at it in the first 2 years, we're coming from somewhere. The economy was an artificial economy. So there was nothing like investment for the economy. So if you look at it as at that period, Nigeria was not really living as Nigeria. Look at dollar now, for example, as at that period. It was not reflecting, Naira was not reflecting its true price as at that time too. And there was no way we could get, foreign direct investment at all. And
I hope you saw that our foreign direct investment dropped.
Yes, it has
in the
dropped.
first quarter.
I agree with you.
Okay.
I agree with you. So, but what is total capital import? We're over $2 billion, which is quite significant, about 34% growth. You are talking of FDI. FDI is different from capital import. FDI is a component of capital import. So total capital import, about over $2 billion, 34% increase.
So FPI, should we be celebrating FPI now?
FDI, foreign direct investment.
That's what I'm saying. Should we be celebrating FPI, the portfolio investment, which we know that at the blink of an eye, it leaves us hanging because FDI has dropped, and that's the main investment.
I agree with you. You see, in economics, you can look at it from different perspectives. But, okay, look at, for instance, now, some school of thought will tell you that our total GDP has tanked. While some school of thought will tell you, no, it has not. After we rebased, we're at over $500 billion.
No, we don't have the rebased GDP here. We have the rebased inflation.
No, I know. I'm saying that if you calculate it as an economy, it's over 500. And we'll still get to that, probably before the end of second quarter. But most of those people who don't see the trajectory of government in a positive light will say that it has tanked to about 198 billion.
No, but because people will ask you, what do the numbers do to the man on the street? What do the numbers do to our purchasing power? So even if when you quote those
there's GDP,
numbers,
the total GDP.
That's what
there's
I'm
a difference, So, but let's look at it from where we're coming from. Dollar at that time, in comparison with Naira, was not reflecting its true value. And that's the simple truth. And that's what I want to speak to the conscience of an average Nigerian. Now, as at then, there were plenty of arbitrage in the system. You will get dollar at different rates. Some people will go to the CBN, feel backdated from M, and get dollar at 168. While you and I, who are part of the masses, will get about 407.
masses? I don't see you as that blood for.
Who will get dollar for over 470 naira. So the president came and said that enough of this arbitrage. Naira must reflect its true value. It's just like a wound that you have been nursing for over 20 years. It can't heal in 1 year. There's a process for healing. You must first get to the depth of the wound. That is where we are now. So that's our equilibrium point. Then before you begin to add everything a doctor will do, dress it well, and it begins to heal. Our healing process has begun. So we are almost getting at the end of the tunnel.
So from your perspective now, we are in the right trajectory. What do you see by the end of 2025? Okay,
so beautiful. And if you look at it now, so many rating companies, so many international organizations, including World Bank and IMF, has agreed that Nigeria is on the right perspective. But, their postulations are saying 8 to 10 years or even more. But as an economist, we must look at the time frame of a particular government, which is 8 years. We must look at it from that perspective. I'm not saying that this government will take another 4 years.
I hope you're not preaching in 2027.
No. I'm not preaching, and that's why I'm saying I'm quoting, international organizations. And so we can only project it for the lifespan of a government by law. And so that's why I'm saying that we should look at it in terms of 8 years, in terms of our growth. You can imagine if there's consistency in these policies of government, in terms of fiscal policies and monetary policies. And so for 2025, going to 2026, I was on this show some time ago when I said that we'll begin to see growth in 2025. Growth will increase in 2026, and by 2027, Nigerians will begin to feel full growth. But I want to say it very publicly that we do not expect price of goods and services to go back to its base in 2022 and 2023. It cannot, because look at world economy over. You know, economies are tanking and they are thinning out, and you know it cannot be the same again. But Nigeria is stable as we speak, and will begin to move forward. Look at oil production.
Okay, so Mr. Dufour, there
Yes.
are a lot of people who have
Yes.
said that the reforms are
Yes.
actually welcome, even
Good.
the World Bank
Yes.
and the IMF.
Yes.
But they said they had advised the government
Yes.
to put in a social welfare program before embarking,
Good.
on some of these reforms.
Which I also
We
agree.
haven't seen, that social welfare program that's solid enough to deal with the consequences. Okay. And then there are others who are saying, while the reforms are impressive, the reason it looks like the reforms are not as efficient as they should be is because the government hasn't blocked the leakages that still exist
Yes.
in the government. And so that is sapping away the gains of those reforms.
Okay, so I will agree with you partially on your projections. But
It's not my projection, they are perspectives.
okay, perspectives
Yes.
of
Conversations
various
going on there.
conversations.
Yes.
I'll agree with you partially, but we must look at it in a broader perspective. And there's no way we want to move forward without looking at where we are coming from. Government leakages, I want to agree with you perfectly that government needs to do more in terms of blocking leakages. And if we take it from the right perspective, I'll still say that economic growth, inflationary pressures, and a few more is being stabilized. And look at growth, for instance. We grew at about 3.8% in 2024 because of the issues of tariffs worldwide. Growth has tanked world over, even in developed economies. But as we speak, we are still growing at about 3.1. Projection for the year is about 3.6. I'm talking of IMF and World Bank. Projection for the Nigerian government is about 4.6 CBN, which is quite a tall order. But blocking of leakages, I agree with you. Programs of government at this point is yielding results, and it will yield more. And looking at the second one you mentioned,
the social welfare.
So for social welfare program, we know quite well that there's a lot of social welfare programs that government is currently running, and there will still be more. We have lots of them, and it's tied down to the youth in terms of educational welfare programs, the loan programs, social infrastructure, even for there's one they opened, over 300,000 people have benefited, which has to do with consumer program, consumer products that you can also get from government. And that one, over 600,000 to 700,000 people have keyed into it. But we want to say that those reforms are good. There's no way government at the center can manage all. And I want us to shift the conversation to states too. In the last 2 years, what have states earned? About 40 to 45% increase in terms of allocations. I'm talking of states and local government put together now. There's no local government in this country that has not earned over 350 million, minimum, as we speak. 40 to 45% increase. So those increase in states, because the federal government will take care of federal programs, federal policies, federal healthcare policies, federal transport policies, and other amiable programs that will reduce sufferings. But where does your constituency lie as a citizen of the country? Is it with the federal or the states? So for the states, they are the closest to you, and local government. How well are these governors using these funds to better the lives of their citizens? We must ask those questions. You know, as a journalist, you must begin to project it and look at a state like Lagos State. How much do they generate in IGR? How much do they collect in federal allocations? What is the impact per local government? So when we begin to look at this conversation, then we'll begin to look at it. How many of these states have, increased subsidies in terms of palliative, healthcare subsidies, mother and child subsidy, transport subsidy, even drugs, medications, subsidy, and so many other forms of subsidies that can also come up. So, as a state, and if you look at it, then we begin to have a good conversation to say that, okay, Nigeria is moving on the right path. On the federal part, they can't cover all grounds. But for policies, especially our monetary policies have stabilized the economy. For fiscal policies, you and I know that it takes time. A major one that I would love government to look at is power, which is key. What has federal government done? Federal government has already signed the 2024 electricity bill. How many states have domesticated it? What are states looking at to bring in multinationals, General Electric, Siemens, and the like, to come and put major infrastructure in states? So it means that states now can generate, they can distribute, and they can also build. So how many states are looking at that? I know there are conversations in Lagos State around that corridor, but how many states are taking advantage? Look at even the local government autonomy that Mr. President signed into law. Tell me, how many governors have started releasing directly? FAC has said that they will release directly to local government. Look at the conversations. How many of them has agreed as we speak? So as we put our searchlight on the federal government, we should also beam it wider on state government.
I guess that's why we have
dividends of democracy can spread around, equitably to all parts of the country.
Well, I guess that's why we have people like you here, Mr. Odufuwa,
yes,
to help us spread the conversation to the subnationals. It's not that we don't discuss them, but
yes,
I mean, you would agree with me that failure, success starts from the president, and then it goes down. He has the stick, he has the carrot.
I agree with you.
But thank you so much for giving us a direction that the next 2 years should be on subnationals.
Yes.
We'll follow up on that even more than we've done before. The Chief Executive Officer of Skyview Capital, Mr. Oluwaseyi.
Capital Plus.
Capital Plus.
Limited.
Mr. Oluwaseyi, thank you so much for your time and welcome.
Thank you.
All right, let's take a break. When we come back, we'll head to the markets right here on Business Incorporated. Welcome back, still Business Incorporated. It's time for the markets now. Will Ibong has the numbers. Oh, most of the markets are closed today.
Yes, I was going to say that, Eni, are you trading on, I don't know, which markets are you trading today? And you're wearing red, so let's just hope that
I'm an institutional trader. Oh, yes. So I can create my market, create my value.
So today we have your own market close at the close of business.
You'll find out the commodity when you get into the market.
Of course, definitely. But let's look at markets. Major markets in Africa are closed for the Muslim holiday, except for the GSE in South Africa. We see that trading up at intraday, 0.27%. Nigeria closed on Thursday, 1.63% up, still at the 114,000 level. It's a frenzy at the NGX. But let's look at EGX. It's also closed Thursday last week in green territory, up 1%. We see that closed at 2,000 level, and we see the NSE in Kenya also closed Thursday, but in green territory. But let's dive into what's happening at the NGX. We see it's frenzied move, moving into 114,000 level. That's uncharted territory for the NGX, but we have Mr. Mukhtar Mohammed, CEO. Finance with Mukhtar to have this conversation with us. Mr. Mukhtar, it's really a big frenzy for the NGX. Tell us what's happening there. Is it not at overbought levels now?
No. If you look at those numbers, you see that three sectors were really moving the market during these 4 days of trading we had. We had the financial sector, we had the ICT sector, which is the communication sector, and the consumer goods sector. And when you look at those sectors, there's still values. And when you look at the stocks that moved in those sectors, in the financial sector, the figures were really up there. The Zenith Bank, Access Bank, GTCO, and UB, and also First Bank. Then you go to ICT, telecom giant, MTN, 52-week high. I mean, so much to unpack on with MTN numbers. Decision from NCC. Consumer goods, Dangote cement moved the world. Remember when Aligo Dangote said about where the net exporter of cement in Africa. That also will trigger market sentiment towards those stocks. So when you look at those things, it wasn't interesting because most of the stocks that really move the market, the fundamentals are there. Not to forget the oil and gas sector. Oando coming back to stream after that wonderful result.
Okay, we'll just take a pause on the next conversation. We still have a lot to talk about. We're just going for a live show. Ini, do you want to help us with that?
Yes. Well, we're heading to Enugu now, where there's a distribution of 10,000 professional kits to health workers. That's for the Southeast zone. And so but that's for our DSTV viewers. For other viewers, Business Incorporated continues. And if you're watching on YouTube, please switch to the next platform on YouTube, and then you stay here with us. Will.
Thank you so much, Ini. So we're just talking about, you talked about the fooders, and we did see a lot of institutional inflows into banking sectors. We see Fidelity Bank, one of the top traded stocks. We see the NGX. Look at the close for the week. The highlights, 2.57% up for the NGX. That's a massive one, 114,000 points. They said we are in uncharted territories, and the next psychological target is the 115,000 level. But just to think about it, is it not, and one of the analysis that we got is that it's trading on technical momentum and not on fundamental. Now, you mentioned fundamentals here, but some people are of the opinion that it's trading on technical momentum and not fundamentals.
I don't understand where they get it when you look at the numbers. What is technical, what is fundamentals? I mean, when you look at the fundamentals, I talked about O and O, and having an earning per share of 5 naira, getting to an earning per share of 18 naira. Is that technical? But when you look at Zenith Bank, you look at the numbers that have come in the first quarter, by what we are expecting in the second quarter, I don't know how that is technical. So ICT, you look at telecom giant, MTN, move the numbers. Look at the result that came out after that data price hike approval by NCC, looking at this corridor of stability we have in the exchange rate, and looking at the numbers that we are expecting after this, I mean, was it a decision between the NCC and the banks and the telecom company, what those debt will mean coming back to those numbers. So I don't know how that looks technical. So it depends on which sector you are. If you are playing some sectors that are not fundamental driven, you could say technicality are moving it. And you and I know some of those sectors. Those are the volatile insurance sector, oversold level, buying level. That you could talk about technical. But when you talk about these numbers that we are talking about, this equity that we are talking about, this sector that we're talking about, we talk about the financial sector, we talk about the ICT sector, we talk about the consumer good. And look at the consumer good also. You also mustn't forget that inflationary figures are coming down by the day, and we are beginning to have that stability in the exchange rate, and that is driving that sector also. So it depends, but I don't think most of what I've said, the three sectors that drive the market were not driven by technical. There's still a lot of fundamentals there.
Okay, talking about the consumer goods sector, we've seen a lot of the companies, international brews, Nigerian breweries, we've seen NNFM, that's the Northern Nigerian Flour Mills, also doing so well in this quarter. You talked about stability in the FX, we all seen it, but is there any other thing driving the consumer goods index to the point that we're wondering what's really behind this momentum in that sector?
Inflation coming down. When inflation comes down, that means a lot of people has fun. And you don't forget that the brewery sector also have a lot of liquidity. So when you talk about technical, you also look at the fundamental of that sector. They just recapitalize. So most of their borrowing is stopped. You remember, Nigerian brewery have not done any commercial paper for a while now. They are not used to that. They are not borrowing from any bank. The shareholder firm has gone positive. Investors are beginning to price in that stocks going forward. You talked about international brewery. Remember, there are also, the challenge with international brewery for me is the high number of outstanding shares that they have. So that has really brought down the potentials of that. But again, you have what we call the snowball effect when it comes to the market. In the fact that Nigerian brewery is selling for almost 60 naira, Guinness is selling for 91 naira, then the snowball effect is that I need to get into this brewery sector because I think something will happen. I look for the next available one. Nigerian international brewery. So that could also be a driver. So
that's what we're seeing in the consumer goods sector. But talking about institutional inflows into banking sectors, we did see that little controversy with Fidelity Bank. But right now we're seeing investors buying and buying. We see one of the top trades, top performers at the close of, last week performance. Fidelity topped the trades more than 3 times. 3 consecutive days they were on the top chart. What do you see? What's the change in Fidelity Bank? Yes, Fitch did release that rating, upgrading their rating.
Exactly.
So is that the only thing that is that what is driving investor sentiment at the moment?
That is part of it. Then don't forget that the MD managing director also bought so much of that shares. It's more or less like a share buyback.
Okay.
You say, look, I have confidence in it. And at the time they did that, they were really in a type of crisis that has to come with the ruling from the Supreme Court. So you get confident in that and say, look, this is what we have been able to do. I have confidence that these issues are going to be resolved and we're going to be better off. And then that Fitch rating came out, and it just became a game changer for Fidelity Bank. I think the rating helped, and also the ability of especially the management saying that we believe in this stock. At the time that report came in, invested about 360 million. That was huge. Confidence.
That's confidence in the market. But just all in all, Mukhtar, about the market, is this momentum, can we sustain it? Can the markets sustain this momentum? What do you see for this week? Because today is a holiday, obviously. Do you see the markets getting to 115,000? And some did say that by the end of the year, we would hit 150K.
Well, by the end of the year, I think that's possible. But again, we must be cautiously optimistic. I heard the chairman of NGS say we might hit that 100 trillion. And of course, he corrected that by that will come in if you have Dangote listed petrochemical and also NNPC. But for NNPC, we have been made to understand that it will not happen anytime soon. So maybe we're looking at Dangote petrochemical. Now, when you look at investment sentiment, will it be sustained? You talk about the institutional investor. This seems to be the one that have moved the market throughout that week. Will they still be coming in? That is what we should be saying. So if we don't have the institutional investor, we still have the retail investor, this week will be a huge week of profit taking. But if the institutional investors are still there, waiting for those more opportunities, thinking that because of the public holiday, we're not able to finish some of our deal, then the market will continue those bullish ones. So now, again, looking at the economy, the economics itself, you said, why the market going faster seems to be different from the economy. You also understand that Tinubu policies, the current administration policy, have favored the market, especially the financial sector. It seems to be the only policy that hit the market, and I mean, the only policy that came in and hit the stock, the exchange, and has been moving ever since, floating up another move of subsidy. But when you look at other policies, there's still a slowdown, implementation, inflation, and all that. But with the stock market, they hit the ground running with those policies. So that, for me, was the game changer. So will the market continue like that? There's a point where market will go that it will take the life of the economy. And if the economy is not positive, then there will be a slowdown.
Thank you so much, Mr. Mukhtar Mohammed, CEO, Finance with Mukhtar. It's always good to have you on the show.
Thank you for having me.
So let's move on to other markets now. We're seeing the Middle East negative sentiment at intraday. Major stocks are still closed for the public holidays. We see in Dubai, except for in the UAE, where we have Dubai and Abu Dhabi indexes trading. At intraday, we see it up 1.08% for Dubai, and Abu Dhabi is 0.41% in positive territory. Let's look at other markets now. They're closed. Saudi, the Tadawul was closed, up 1.59%, and Qatari index was down at the close of business last Thursday. Now look at U.S. futures, how they traded today. We see that China-U.S. trade talks in London. We see how that it had little effect on the market, but we did see some green. Look at the Dow Jones up 0.08%, and the S&P 500 0.09%, and the Nasdaq just trading in flat line in red 0.00%. But this move comes as all three major indexes notched their second straight winning week last week on Monday. Now, officials are still expecting this meeting to hold. We'll see how that influences. Further investors are keeping their eye on that. And inflation data is also expected to be a key topic later this week. We're going to be having the latest consumer price index, which is due out on Wednesday. And this is followed by the producer price index on Friday. Traders will also be looking out for clues as to how the current tariff rates are flowing through the economy. Let's look at China. Now, I mean, the Asian markets, now I'm talking China because of the talks. But Asian markets closed Monday as investors awaited the trade talks that are going on between Washington and Beijing later today. And they digested also data, economic data from China. We see trade tensions seemingly, easing between, these two major economies. We've looked at the Nikkei, how that impacted on the Asian stocks. We see it up 0.92%, 38,088 points. Kospi in South Korea up 1.55%, and the Hang Seng in China up 1.63%. Let's look at mainland China. How did that fare? Let's look at it very quickly. You see mainland China's stocks in the red, although they were in opposite direction. If you see that index there, it dropped. It also rose 0.43%. Apologies for that. It rose 0.43%. And we see that consumer price index inflation fell in China, and that impacted the positive closes we're seeing for the index. And we're also seeing the decline in forecast by economists. Producer price index also declined compared to 3.3% compared to 3.2% drop expected by analysts as well. And the country's export growth, but the country's export growth missed expectations in May as shipments to the U.S. declined sharply. India's Nifty was up also at the close of business by 0.4%. So basically what's happening right now in China is more like optimism because of the backdrop that, China and the US are going to be having talks, and they're seeing that, maybe they're going to smooth things over. Maybe there's going to be progress in these talks, not more of like, is it going to happen? And maybe more of easing of the tariffs, and then US and China coming to a consensus, a compromise, as the UK and US have had. And right now, UK is playing big brother to this.
Yeah, but I mean, I believe the UK even knows that they're not supposed to be too relaxed, because they also have, I think they have a countdown coming on.
They do have that.
Even though they are not included.
But they were including the steel tariffs, they were excluded from that.
I mean,
but it's
everybody have your own cross.
Thank you so much.
All right, Will, thank you so much. All right, now let's head to the lead now. Migration has been a hot topic in Germany for years. With the country opening up its borders now to refugees, I guess it only gets even hotter. The Chancellor of Angela Merkel, ever since, however, protests against migration have grown, and they've threatened the extreme right, and mostly based on the idea that migrants bring financial hardship to Germany. Lars tells us more about what this new study is and the economic impact of migration in Germany. Hi, Lars. Good afternoon.
Thanks for having me. Well, there are some interesting findings there. Contrary to what an ever-growing number of Germans might have feared, it seems migration is actually strengthening the German economy and budget. The study was done by noted economist Martin Werding, who is a member of the Council of Economic Experts that are advising the German government. And Werding says, to put this in one headline and not too many numbers, if Germany welcomed 200,000 more migrants every year than we do right now, it would save us an annual 104 billion euros. That means every migrant that comes to Germany, most of them are actually looking for jobs, looking for a safe but also productive life, is literally worth a couple of thousand euros. Now, that is a reality that absolutely clashes with the perception held by many people that the government is just shelling out money and to support migrants that we can no longer afford.
Yeah, but I mean, it does sound good. How come migration is threatening the budget that much?
It mostly has to do with the fact that the German population is aging and we're facing demographic challenges. Currently, more old people are retiring than young people entering the job market. We're already seeing a crisis in many sectors, including in healthcare, in skilled labor, in gastronomy and services. We need people to fill jobs, and we need lots of them. Economist Werding says between 300 and 350,000 would be needed to cover the demand of today's labor market. Now, if we get these people into these jobs, by the way, that also helps grow the economy in general, and that raises the amount of taxes that is paid into government coffers. Oh, and more people working obviously would mean more people paying into Social Security and retirement funds. Those are under fiscal pressure and suffer from the demographic trends we've seen for way too long already.
What about the cost of this migration?
Yes, there's obviously a cost to migration too. The government is paying for migrants' housing, for their health care, for language classes, for other measures to help with integration. There's also the need for more daycare and schools. But, says the experts, it's not only migrants that cost the government money. In fact, many people, migrants and regular citizens, have a negative fiscal balance over their lifetime. Many take more from the government than they put in. This phenomenon has been growing as people get older, as they receive retirement for more years than, let's say, a few decades ago. Also, economist Werding says we're spending too much on welfare programs that support not only migrants but regular Germans too. So the economist is saying that the government should certainly lower spending, but that doesn't have to happen with regards to migrants only, but much more generally. At the same time, he's saying we have to do a better job to attract migrants and get them into jobs as quickly as possible. Right now, there are bureaucratic hurdles that are frustrating migrants and actually have a negative financial impact on the country. And these bureaucratic hurdles, they need to fall.
Well, they need to fall. Thank you, Lars. Talk to you tomorrow. All right, let's come to Africa. We start from South Africa, where the president, Cyril Ramaphosa, has reiterated the urgent need for fundamental economic transformation in the country and the continent, highlighting that inclusive growth and empowerment must go hand in hand. He was speaking at the Black Business Council event, and the president underscores the council's critical role in addressing the country's historical injustices and economic disparities.
In many ways, one would say that we are in a transformative era in our country, because transformation is not simply about just reform. It's about rethinking systems to ensure that, yes, there is dignity, there is equity, there is also sustainability and resilience for the future generations that will follow us. And it is to this end that we adopted the theme that we did for our G20, that it should be about fostering equality and fostering sustainability and ensuring that, yes, there is full transformation. Now, the current polycrisis that the world is facing, which manifests in the way that it is, as I articulated, demands systemic change rather than incremental adjustments.
And also in Africa, China-Africa trade soared 12.4% in the first 5 months of this year to $134 billion. Yet, Africa accounted for only 5.4% of China's total foreign trade, according to data released by Asian Countries General Administration of Customs. Africa's exports amounted to $50.6 billion between January and May, and that's up 1.6% compared to the same period in 2024, while China's exports to Africa rose 20.2% year-on-year to $83.4 billion. Algeria is poised to allow wider foreign ownership of mines as a gas-rich nation looks to boost production of minerals, including phosphate, iron ore, and lithium, to diversify its economy. New legislation permitting foreign companies to hold as much as 80% of mining projects is set for a vote in Parliament, potentially marking a major shift for the nation, where state enterprises wield majority control. The North African country is also looking to streamline the licensing process and trim billions of dollars worth of costly imports, including steel and marble, according to the head of national mining company Sonorem. In Zimbabwe, the government has, with immediate effect, outlawed the manufacture and sale of ethanol-laced alcohol, commonly known as Kambwa, in that country. The type of alcohol, which is usually manufactured in backyards, becomes 10th illegal harmful liquid to be banned in Zimbabwe. And the government had already banned 9 illegal homebrewed and distilled alcohol beverages through a government gazette publication. Minister of Home Affairs Gazembe notified of the ban of illegally manufactured harmful liquid in the country. And coffee is what's going on in Ethiopia. The Foreign Agricultural Service of the United States Department of Agriculture forecasts that Ethiopian coffee production is going to increase to 11.6 million 60-kilogram bags between 2025 and 2026. The increase, they say, is because of favorable weather, increased productivity from regeneration of older trees, and the use of higher quality materials, including productive seedlings. Exports are expected to also increase to 7.8 million bags, driven by stronger prices and reforms that have increased direct access for producers and exporters to international markets. And then from Ethiopia, we head to the crypto space now and see what's happening there. We're beginning from Ethiopia. Ethiopia is preparing to regulate crypto despite ongoing ban. That's what Ethiopia is planning to do. Ethiopia's Financial Intelligence Service is preparing to regulate virtual currencies despite their ongoing ban in the country. Now, Ethiopia's Financial Intelligence Service announced that preparations are underway to regulate virtual currencies, and the announcement was made by the FIS Director, Muluken Amare, during a recent meeting of the Eastern and Southern Africa Anti-Money Laundering Group in Addis Ababa, which brought together financial security officials from across the region to address emerging risks in the financial sector, including those posed by virtual assets. The FIS preparedness efforts are being conducted in collaboration with international partners, including the United States, Russia, and members of that body. And there's an alarm in Nigeria from the Securities and Exchange Commission. They are warning Nigerians not to invest in Punisher coin. If you see Punisher coin, you need to run away. That's what the Securities and Exchange Commission is warning. They say do not invest in an unauthorized pre-sale of crypto coin termed Punisher coin. It also has that PUN, $PUN. That's its symbol. Do not put your money there. Securities and Exchange Commission is warning. CBEX is not long ago, so please, I guess we should listen to Securities and Exchange Commission. Well, those are the headlines in the crypto space, and that's all on Business Incorporated. Thank you so much for being a part of this holiday list. Business Incorporated will come again tomorrow, God's grace, and they will give you news and economic stories going on around you and even outside of where you are. John McQuarrie, enjoy the rest of your day. I'll see you tomorrow. God's grace.